Checking the price of crude oil this morning, you're going to see WTI just below $78 a barrel, $77.96. The International Energy Agency warning that a U.S.-led surge in global oil production will outpace demand by the end of the decade. The IEA now urging energy giants to adapt their strategies amid potential disruptions to OPEC's market control. Joining us right now is Jeff Currie. He's Carlyle Chief Strategy Officer of Energy Pathways. And Jeff, does that sound accurate to you, the idea that we're going to have too much oil, we're going to be rolling it by the end of the decade?
Yeah, all we know is oil demand just keeps surprising to the upside relative to everyone's expectations. By the way, what I find ironic about this, which is, we'll talk about sentiment in a few minutes, is copper is worried about not enough EV demand, and the IEA is worried about too much EV demand. New Zealand concerned about whether or not committing to the transition at this point in time. I think it underscores one thing that we know for sure: the pathway on this transition is completely uncertain at this point in time.
Yeah, it was weird to see them actually suggest that energy companies adapt and maybe look for new strategies, because we're thinking, okay, we've got a whole lot of oil that's rolling around, but if oil prices were to spike by $10, everybody, all bets would be off the table, and every government around would be urging them to pump as much as possible.
Absolutely. But I think it just captures a bigger point that's driving the market today. Is sentiment is swinging from data point to data point. You take oil, this has had a huge impact on positioning. We just dropped 500 million barrels of positioning. That is absolutely enormous in record levels. That caused a $15 barrel drop in prices. Yeah, we bounced off the bottoms recently, about 100 million back in, so you're 400 down. But I think it illustrates a point that the sentiment swings, whether it's copper, oil, or gold, are enormous in these markets right now. So I think that the bigger question to ask here, why are the sentiment swings so big? And I think a lot of it has to do, we saw it yesterday, the market doesn't know how to handicap the macro backdrop. You know, is it one rate cut? Is it zero rate cuts? Is it two rate cuts? And yesterday it bounced between 2 and 1. But I think the key point here is when the market is fearful of inflation, it buys real assets. When the market is comfortable there's going to be low inflation, it buys financial assets like the NASDAQ. Last time I was on this show, commodities were up like 15% year to date, while the NASDAQ was up around 8%. Guess what? Those two have reversed in the current environment.
Okay, those are two different things, though. If the technology stocks take off every time inflation is low, it's not that inflation is low, it's that people are anticipating the Fed will cut rates, and that will mean a lot more free money, so things can bid those things up once again. When it comes to commodities, inflation readings, I think commodities may be less connected to the Fed, more connected to inflation, because if you see inflation that is there, you are going to see a crimp on demand. And I think it's more that supply-demand that really takes place in precedence for commodities. Do you agree?
Yeah, so another way to say it is commodities are spot assets driven by today's supply and demand. Financial markets are anticipatory assets driven about the expectation for the future. So by the way, our view is that commodities, where we are in the business cycle, and somebody saying at the beginning of the year, this is when you likely see commodities outperform the other asset classes. And when we look at it, the fundamental picture going into 3Q, whether if it's oil, copper, or gold, looks very solid. Driven by seasonal increases in demand. We're seeing in copper green shoots of inventories declining in China. The supply situation, given the recent OPEC meeting, points to a tighter 3Q. And even in copper, Codelco's production just hit an 18-month low. So we should see solid third quarter draws across the commodity complex, leading to higher commodity prices. And I tend to think that next time we're on this show, it'll be a flip-flop where, commodities are back up 15%, the NASDAQ is up 8%.